Hi guys, welcome to another episode of The Aspiring Entrepreneur. I'm your host Hamza Chowdhury, and welcome today. It is March 21st. It's our Sunday night video, and what we do in this video is we go over stocks that we watch on this channel, interesting stocks that we find, even the viewers, you guys suggest, and then basically go over them, what key levels we're looking for, and sort of the recent price action and what we can expect in this entire week coming up. With that said, guys, if you did enjoy this video, I do appreciate if you do hit the like and subscribe button to our channel. We're a 100% free content channel, and we cover anything that has to do with entrepreneurship. So it could be anything with stocks, or it could be anything to do with real estate, engineering, business, small businesses, customers, you name it. We cover a lot of different things on this channel with a stronger focus on investing into the stock market. With that said, guys, just jump right into it. What I did today, if you're new to this channel, I typically have a daily chart, which is just a behavior of what the stock is doing per day. And today I decided that I'd switch it to a weekly for the weekly videos, just so you guys can get a better sense. If you're new to the market, you join maybe in the COVID era of traders, and maybe you're not too used to the sort of the long-term behavior of the stock market. I just wanted to change this to a weekly chart so we can look at longer behaviors of the stock market and make a little more sense of what feels like significant pullbacks on the market. And just coming back here around the August time frame, and even around here around the election time frame, if you traded around that, you can remember that the market really felt like it was selling off. And so what I wanted to do was, if you look at sort of the direction of the market, pretty much back for the last few years, you can clearly see specifically from 2019 that stocks like Apple and many other stocks have really gone up. And so starting with Apple tonight, basically what I wanted to do is kind of make sense of what's going on. And so you can see this sort of yellow line represents the 50-day moving average, and this purple line represents what we call the anchor VWAP. And so you can quickly see that the stock Apple is clearly moving up, and recently it hit a high right here of $145. As we know, the Apple car has been sort of the new headline, and just given the recent pullback in the market, which a correction of 10 to 15% is perfectly normal, you can see here that we're clearly still uptrending. Okay, and so as long as we still make these higher highs and higher lows, we're still clearly uptrending in Apple. Now, once we start to break down, so for example, we start to break key levels like the 50-day, okay, and we come beneath the 50-day, and let's say we trade below the anchored VWAP, and we start to make lower highs and lower lows, that's when we can start to look at if Apple is selling off. And so for me, if Apple starts to make lower highs and starts to trade below, let's just say $100, that's really when I can start to see Apple downtrend. Now, of course, Apple is a $2 trillion company. I don't personally see that happening. I continuously see that, with the split, a lot of buyers, a lot of people on the tape that want to buy the stock up. And so don't be surprised if, you get these dips, Apple just gets bought up. Okay. So when it came here post split at 103, it got bought up, and then 105, it got bought up. Okay. And so it constantly gets bought up. So I wouldn't be surprised to see if anything gets dipped down here closer to the anchor VWAP, which we identified as around 115, 116, that it gets bought up. And so for the week, we were actually down. If you look here where we started on Monday, we were trading closer to 121, and we ended the week about $1 short. And so again, Apple is making this push back and kind of reclaiming some of the losses where it bottomed up around I believe it was 117, 118, where we hit our solid support. And so if I turn that on for you guys, you can see that we have a solid support here at 117.80, and we have a dab play, which is where we basically talk about, just going small in size, not going full size. A lot of times when we enter trades, we're going full size on our first position with no room to add. Okay. And I'm not saying you necessarily should add to losers. You should obviously also add to winners. But if you put full size on your first position, and let's just say Apple dips like it can in the morning hour. So if you buy, for example, right at open, and the stock tanks another $1, right? So there's a better entry. And so what you want to do is look at the key levels, find the validation, find where you feel comfortable owning the stock, and of course, clearly identify, if the stock is uptrending. Okay, don't try to find the bottom, because clearly there's big money out there, and they're always going to, have more money than we as the retail traders. And so just be careful. And so again, 120 is a great solid buy at Apple. I'd say 117.80 is still heavy. And like I mentioned in my previous videos, again, risking bound back to anchored VWAP. at 115. And so that's still the play for Apple. I still see 123 as the resistance, and I see that us testing that out even tomorrow. But again, once we can hold and break, that level, then we can definitely keep on going. And I mentioned also on Friday's video that you may notice that there's some levels here that are identified in red as resistance and green as support. Even if we necessarily break a support, I don't necessarily just turn it as green until I'm fully convinced and it can hold. Okay, so 120 has been holding for quite a while, and so it still remains green. And same thing with the 117.80, which we identified back in October last year. And so just so, again, if you're new to the videos, just sort of know that I don't just turn these colors green and red every single day. I like to see validation. I like to see these levels hold. And so again, for Apple, holding the 120, and then like I said, breaking the 123. And so we'll do a follow-up daily recap tomorrow and see where we land. But clearly we're still uptrending in Apple, so this is clearly just buying the dip and people cashing out profits up here at the 145. Okay, and now going on to Tesla. Tesla's no different. So if you look at the weekly chart, I'm sure we can all agree that Tesla had a massive run up in 2020. It had about a 700% run up in a year, and simply just cooling off. Okay, so we were trading outside this regression channel, and now we simply are cooling off and getting the dip buyers in. Okay, and so if you weren't a buyer at Tesla at 800s, and you probably cashed out profits if you had this massive run up from the S&P inclusion, then of course you're probably getting back in here in the high fives and the mid fives. And so I don't really necessarily see us getting down here back into the fours, but definitely there's been some great opportunities and buys in Tesla, and you get these massive swings. And so if you look here, this chart represents what we call the average true range of the stock. You can see Tesla starting to get up here, up in like the 90s and 100s, which is the spread of the stock. And so what was trading in a very consolidation range back in the 400s, where we had, let's say, a $15-20 spread, you're now seeing that this Tesla stock, at least recently with the volatility of the market, has been trading with a wide range. And so you're getting these fluctuations between 650, 700. That's like a $50 spread. Okay, so assuming you're on the right side of the trade, it could be very profitable, but you can also help you manage your risk, which means that if you're on the wrong side of the trade, how many points am I looking to possibly risk? And so for Tesla, again, 660 has been solid for us. I did mention on Friday we did close below it, so technically, again, it would be resistance, but I'm confident just given the strength of Tesla. If you guys aren't aware, Kathy Wood, who had predicted that Tesla would run up to $3,000+ pre-split, predicted that Tesla would actually be a $3,000 stock in 2025. And so she's bullish long-term on Tesla. Obviously, that's about 4 years from now, but we know Tesla has a lot of exciting things going for it. It's building plants. It just doubled its investment in Bitcoin because it was $1 billion, and I think in February is when it was announced, and Bitcoin is more than doubled. And so Tesla has a lot of good things going for it. It's growing its energy sectors, and with the revenues growing, I see this again as simply a dip buy. And again, my price target for Tesla personally this year is $1,000, and I'm still sticking by that no matter what happens here on the short-term swings. And so again, great reason to dip buy Tesla. And again, I expect tomorrow that we're going to break through the 660 level. And again, the 695 level I mentioned on Friday as well, it did hold, but it clearly broke down. And then it clearly, has been trying to test. So it's a strong level, and it's going to remain a resistance level until we can really hold above it. And again, the main thing here is to break, test right over here, which I mentioned 775 is the next level that I expect Tesla to really test for us to get back into the next leg up. And then obviously you can see the Bollinger Band as well it's been consolidating on the daily chart. Okay, Palantir, one of my favorite stocks, but definitely one of the weakest. Once again, we had that breakdown as expected here on the 2750 level, which you identified. Same exact thing. You can see that, it's still a new stock. It was direct listed in September, and same thing. It's clearly uptrending, right? So you can clearly see that the stock is uptrending. So again, I'm a day trader. I see the daily fluctuations. Sometimes they could be very painful, but longer term traders, you can tell that these stocks are clearly uptrending. So if you're an early investor in the stock, maybe you held on to it, maybe you sold some of your shares, you can still see that the stock is clearly just dip buying down here, and you can see that this long wick basically tells us where the buyers are coming in. And we also mentioned there was just a lockout period that expired, and so there was a lot of shares available to the market. And so now that that's over and a lot of the sellers are getting flushed out, you can see that the volume has sort of died down. since earnings. And so I expect us, now that the buyers are in there, when they're ready to push the stock back up, guys, that we're going to get back here into the 30s. And we do have demo day coming up in about 3 weeks, and so that's going to be something exciting. That's where we got this massive move from essentially 25 all the way up to $33, and then to $40 the following day. And so expect you know, if you're not in Palantir, again, I would definitely be dip buying in the low mid 20s. And you can see here 25.50 was a great support. Again, we did have that breakdown technically, but I still consider it a good support to trade. Anything under 25 to me is an absolute steal for Palantir, but 27.50 has been a very strong resistance, and that goes back all the way over here, okay, post earnings. And so what I expect to see again is a push to 25.50, possibly even tomorrow, probably, and then we'll, you know, see if we can get above it. And once we can close above it, then we can look at getting back above 27.50. And the day that we hit 27.50 a handful of times, either we fade off of it or we bounce and we get constantly rejected. Like I said, I do expect that the algos will definitely push that up, but we definitely need to see some volume coming in. And so if we see volume, you know, essentially coming down, we can definitely expect that we need to see some volume picking up for us to get back up above, back into the 30s. Okay. And so my personal trade plan is to sell Palantir and the push to the mid 30s. And that's just a plan that I'm sticking with. And again, I'm long-term bullish on the stock, and that's my personal plan. Trade, of course, to your only risk, to your own personal risk. Clover, it's been a fun stock to trade. I mentioned that I am back holding some shares from the low 9s that I picked up. And, you know, same thing. It's you know, this is a stock that's actually downtrending, and I didn't get involved in the stock until the low 9s. And so I know there's a lot of people that are back holding here, but again, you can clearly see that this isn't a stock that's uptrending, right? So let's look at the difference between, let's say, a Palantir or a Tesla or an Apple, okay? So when you're getting involved with Clover, understand that this is a stock that's clearly downtrended over the last few weeks because of the Hindenburg report that came out. And then, of course, the earnings necessarily weren't that great at all. So this is not a stock that's necessarily uptrending, it's downtrending. But again, we have this double bottom here around the low 7s. And so I mentioned that I was holding on full size, and I was going to push at where I really felt like we broke off, which was this high volume bar, which was right over here into the 1050s. Okay, so when we retest the 1050s, that's where I plan on selling my personal shares. I mentioned that we identified the 815 level, you know, a few days ago, and you can see that, you know, we've held this level now for 2 weeks, and I expect us to. And so this week, again, I expect us to hold the 925, and we could fade off of that. But once we essentially can get some volume, get the buyers in like we did here when we had the quad witching day on Friday, you know, when we could get some serious volume in here, I could definitely see this thing going up here. And that's where I'm personally going to be selling all my shares, which is in the push to the 1050s. Okay, so I'm long-term also bullish on this company, and I think we've had a great sort of, you know, retracement back to where we had the major breakdown where the stock started selling off. And also keep in mind, you know, we're looking for a trend reversal. Okay, so we've had all these red candles, and of course we had our first green candle, and so we just want to see a trend reversal. And you can see that this engulfing pattern, basically we need to see something to the push of 1050, which is why I want to get out of the stock here. Okay, so we get a green candle that essentially engulfs this major red candle where we had the breakdown in the first place. Okay. Spce, you know, a lot of these stocks I personally think are fun. Hopefully you guys are invested and excited about them as well. You know, super bullish stock. I mean, same thing. It had this breakdown here because of a failed launch, and then it had this massive move. I think this was the day that they announced that, you know, Kathy Wood was investing in the stock somewhere in here, and then it started having this breakout all the way up to like $60, and then it had this breakdown, and you can see it bounced off the 50-day here and the anchored VWAP here, and same thing here, right? So it's just a perfect dip buy right off the 50 when we had the, you know, the sell-off. And now essentially it's been just trading sideways. And so I mentioned that, you know, selling here easily could be, you know, if you look here, we have some, if we look here at the daily chart, I would be selling here. Oops, excuse me, wrong chart. So I would be selling here going into the 50-day, so in the mid 30s, and at least retesting here at $36. Yeah, $36. And so that's what I mentioned, is simply this was a dip buy, some consolidation sideways, and you can see here that we had our first positive momentum day coming on Friday. And so it was a quick good dip buy here at the 31 level. And so expect definitely a retest of $36, and that's where I would be selling my shares if I was long Spce, if I was dip buying here. Okay, so you have these really easy moves that you can make when a stock gets beaten down all the way to its anchored VWAP, or in this case, its 200-day moving average. And so definitely a lot of good, you know, solid. You can see the buyers are here. Okay, this isn't something that trades sideways. on this day here, $31 right at open, and then you can see a full recovery, okay? And it not only closes the gap, but it closes even higher. And so that's what you want to see stocks. You don't want to see them just hit these targets and previous highs and then fail. If they can sort of hold and trade sideways, and that's a good level, okay? And so Spce definitely has a lot of institutional buying, and so it was just a great steal, anything in the low 30s. Personally for me, and I mentioned this on Friday, a lot of stocks we're seeing get bought up. I actually sold this just based on the RSI and knowing that what they were doing is pushing it after hours, knowing that we ended up selling off. And so there was just plenty of dip buys on Thursday that I mentioned it was my biggest winner. And then Friday, you even had a better dip buy. Okay, so you could be adding shares anywhere in the low 30s and then selling it back in here to the mid 30s and to the high 30s. Okay, and you can even go risk all the way up to here to the 50-day, okay? But know that you're risking down here to $27 as potential as a low. But we've already validated that, and I expect us to get back up there, okay? And the last stock, which I mentioned was really kind of the goofiest, I was short bias coming into last Monday on AI, quite a heavy size. Obviously, I covered way too early, but I mentioned that this is a little goofy for a lot of reasons. One, it's an IPO. It came out here in the 90s, and now we're trading, you know, at $75. And it was goofy because this is the move that we had last Friday, and it held trend. And usually if you look at any stock that holds the level here in the 90s range, it doesn't just break down, okay? Usually it will bounce off that level and continue, right? It'll continue. And so we had a lot of volume that day, which was the last Friday, which would have been I believe the 12th. Yeah, the 12th here. And so we had a lot of volume coming in here, and we held the key level, and then we just broke down. And so I mentioned that's a little funny, and it is a heavily algo trade. The way the algos trade this, you know, the spread's, you know, 30, 40, 50 cents, 80 cents sometimes. And it's not necessarily, it trades about 5 million on average right here. It's about 6 million. And so it doesn't trade a whole lot of shares. It is some liquidity, but you can see, you know, you got these massive sell-offs, and then you have these massive buy-ups. And so here's a stock that, you know, comes up to 90, trades down to 76, and then goes up. And so it has a lot of volatility, but when you're making all-time lows, again, this is clearly downtrending, okay? And so if we go back to the weekly chart, right, you can see this clearly has downtrended. And guys, we were up at $180. And so it's just crazy what this thing's doing. Obviously, you see these little wicks are completely long, but I would really be surprised if we don't get back up here into the 120s. Okay, and so I bought heavy shares in the high 70s. And I'm just holding on to them, waiting for that push back up into the 90s. And like I said, I expect us definitely here, you know, get back into the 110 where we really started having this breakdown after earnings. And so I'm not too worried about it, but I just think it's crazy to see a stock that, you know, back in February was $175 and in a month essentially has lost, 60, 70% of its value. It's just incredible. So be careful with that, guys. So again, key levels here, you can see the resistance here is clearly at $83. And so that's probably where I would be selling some shares. If you bought anything in the 70s, is selling some here at the 83 level, which definitely will come this week. So don't be surprised, okay? And if we can break through that, then you could, the next level would probably be here or closer to $90, around 88. And so I would go 83 to 88, and then you can sell the rest of them right up here into the mid 90s, okay? So anything you're dip buying here, I would definitely expect some type of reversal up here, $83 this week. And then, like I said, you can hold on and follow your risk plan. And I was just scalping and dip playing this constantly. It's been a great trade. So with that said, guys, as always, I wish you the best of luck trading, and I hope you found this video useful for you. If you did, please do drop a like, and always, I appreciate you guys, and I hope you have a wonderful week, and I'll talk to you guys tomorrow. Take care. Bye.